Meanwhile, the Perplexity deal raises the stakes for the Gulf, where various countries have been positioning themselves to take the lead in the race to acquire the latest artificial intelligence technology and lead the way on the creation of domestic AI industries. 5 Gulf sovereign wealth funds deployed $82 billion last year, accounting for more than 60% of all sovereign wealth fund investments, according to Global SWF. But where is the money going? Saudi Arabia, the UAE and Qatar are spending billions of dollars on data center projects with Microsoft and OpenAI. They're also attempting to buy chips in huge numbers from NVIDIA and AMD to fuel their AI ambitions. The UAE specifically is working to cement AI leadership through the creation of an Arabic language AI model. Abu Dhabi is home to 3 of the top 5 most active sovereign funds in the Gulf: Abu Dhabi Investment Authority, Mubadala and ADQ. Together, they manage over $1.7 trillion in wealth. It makes Abu Dhabi the wealthiest city in the world in terms of sovereign capital. The funds have a massive focus on artificial intelligence. Mubadala, for example, deploying $24.2 billion last year into a multitude of sectors, including AI, where Abu Dhabi is seeking to gain a foothold. Mubadala, alongside the UAE AI firm G42, was one of the founding partners of a tech investment firm called MGX in the UAE. MGX, of course, was set up with the goal of eventually topping $100 billion in assets. It now plans to contribute to President Donald Trump's Stargate venture and has backed both OpenAI and Elon Musk's xAI. It's also working on building energy infrastructure and data warehouses. The Stargate UAE project, which was announced during President Trump's visit to the Gulf in May of this year, hopes to build the world's largest set of AI data centers outside of the United States. It is a big deal for the Gulf, which will use NVIDIA chips for the project, despite some concerns about the region becoming a backdoor to China.
Thursday saw a little increase in NVIDIA stock as Foxconn, a partner, continued to signal a high demand for AI infrastructure. At $182.12, shares were up 0.4%. The stock dropped 0.9% on Wednesday, and it doesn't appear that it will move much before the company's August 27th results release. An analyst report that suggested NVIDIA is postponing the manufacture of its next-generation Rubin hardware in order to better compete with rival AMD's chips was refuted by the company on Wednesday. NVIDIA confirmed in a statement that Rubin is still on course and that the report was inaccurate. On a number of projects, NVIDIA collaborates with Foxconn, a Taiwan-based company formerly known as Han Hai Precision Industry. Although Foxconn is Apple's main contract manufacturer, the company is becoming more and more involved in AI infrastructure, especially servers that house NVIDIA chips. On Thursday, Foxconn's largest division surpassed smart consumer electronics, with cloud and networking goods, including AI servers, accounting for 41% of its second quarter revenue. In the current quarter, the company anticipates that revenue from AI servers would increase by more than 170%. According to a statement from Foxconn CEO Cathy Yang, AI rack shipments are increasing thrice this quarter compared to the previous one, which is indicative of steady production optimization and ongoing high client demand. NVIDIA's current AI rack servers, the GB200, GB300, NVL72, consist of 72 GPUs connected in a single server rack. The cost of each server is in the millions. According to Mizuho analysts led by Vijay Rakesh, the market for AI servers is expected to increase at a compound annual growth rate of 14% until 2029. In a research note published Thursday, he increased his target price for NVIDIA from $192 to $205. He attributes the shift to rising demand for AI servers and significant expenditures on hyperscalers, which should keep both businesses occupied for the upcoming quarters. Rakesh anticipates that fresh GPU license approvals in China would add between 300,000 and 500,000 units annually across NVIDIA and AMD, supporting second-half momentum into 2026. He also sees Taiwan-based server manufacturers, such as Wistron and WeWin, driving strong buy-ins of NVIDIA gear. Mizuho maintains the July quarter revenue estimate of $46.2 billion for NVIDIA, but raises multi-year projections, predicting fiscal 2026 revenue of about $208 billion, with an EPS of $4.51, followed by $260 billion, $5.95 in 2027, and $292 billion, $6.71 in 2028. Mizuho wagers as both chipmakers move into the AI age, execution, supply cadence, and China licensing continue to be critical risk variables to monitor, but AI demand maintains the tailwind strong. Debating NVIDIA's complete domination is pointless at this time. NVIDIA's stock has steadied out after a rocky 2025 start, giving investors a return of about 35%. In and of itself, I wouldn't describe it as a life-changing performance. But the freight train seems invincible. Furthermore, following the market close on August 27th, NVIDIA is expected to announce its earnings report. Everyone on the street will undoubtedly be anxiously consuming the disclosure. NVIDIA is undoubtedly one of the leading brands in artificial intelligence. Major agreements are also being signed for its most cutting-edge AI chips. Additionally, the majority of analysts recommend NVIDIA's stock as a strong buy. There is an endless list of basic strengths. Therefore, it is argued that NVIDIA's stock is undervalued in relation to its genuine potential, even though many may view the multiples as extremely high. This argument, however, assumes that the market hasn't already factored in all of NVIDIA's advantages. The assertion that readers of financial publications understand NVIDIA's actual worth while the rest of the market does not would be exceptional. Regarding Tesla's aspirations for artificial intelligence, AI, Elon Musk just made a significant declaration. Tesla's electric cars, EVs, and energy storage solutions are what most investors are familiar with. But for years, Elon Musk, the company's CEO, has been outlining his plan to turn Tesla into a full-stack technology company rather than just a conventional automaker and green energy pioneer. Musk is particularly interested in how artificial intelligence, AI, will be used to create the company's next-generation goods and services, such as fleets of completely autonomous cars and humanoid robots. However, Musk gave investors some grim news about Tesla's goals at the beginning of August. Let's examine the current situation with regard to Tesla's AI roadmap and determine why investors in NVIDIA stock should rejoice at this time. These days, the majority of AI engineers train and infer their models using clusters of GPUs provided by companies like NVIDIA or Advanced Micro Devices. It should not be surprising, however, if you know anything about Musk, that the serial entrepreneur decided to go beyond commercially available solutions by creating an in-house supercomputer system known as Dojo. On paper, the idea seemed commendable, even though Dojo was nothing short of a moonshot in AI architecture. Tesla would effectively own its computational stack and have a competitive moat if it could vertically integrate its own AI architecture across humanoid robotics and robotaxis. Although Dojo has long been a cornerstone of Tesla's optimistic story, Musk recently shared some distressing news to investors. The executive called the standalone Dojo platform an evolutionary dead end and announced to investors on social media site X, previously known as Twitter, that Tesla's attention will now be on semiconductor developments dubbed AI5 and AI6. In essence, Tesla's pursuit of several chip architectures targeted at various applications is not economically or strategically sound. Rather than Dojo, AI6 stands for something more complex. AI6 will manage training workloads and inferencing neural networks across Tesla's wider infrastructure use cases, eliminating the need for a specialized and constrained computing platform like Dojo, whereas Dojo's applications were focused on certain niches. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. On July 9th, NVIDIA became the first business to reach $4 trillion in market capitalization, and it has since continued to rise. NVIDIA's market capitalization reached $4.48 trillion on August 7th, barely short of the $4.5 trillion milestone, and set a new intraday high. NVIDIA's explosive growth is a market story as well as a stock story. Because of its size, NVIDIA can significantly increase the S&P 500 or the NASDAQ composite on its own. Considering that Netflix is currently the 16th largest S&P 500 component by market capitalization, gaining about $500 billion in market value is akin to starting a business the size of Netflix out of thin air. Wider market gains follow NVIDIA and its megacap counterparts. Here's why I firmly believe the market valuation of the growth stock will exceed $5 trillion and why NVIDIA has a well-defined path to success in the future. NVIDIA's market worth was less than $500 billion 3 years ago. To become the most valuable business in the world, NVIDIA had to rise above $4 trillion in market capitalization through a combination of investor optimism, profit growth, and the emergence of a new era in artificial intelligence, AI. However, NVIDIA will have an easier time getting to $5 trillion and beyond. While there is just a 25% rise from $4 trillion to $5 trillion, there is an eightfold gain from $0.5 trillion to $4 trillion. On a percentage level, it's not asking for much over a few years, but it's an unparalleled amount of value creation. Investors might be less inclined to pay such a high price for the stock, though, if NVIDIA's earnings growth rate slows. At 58, NVIDIA's price-to-earnings ratio is significantly higher than that of the majority of its mega-cap competitors. However, NVIDIA can support that price since its earnings are expanding at a far higher rate. NVIDIA's price may compress, though, if it were to slow down to the levels of a business like Microsoft, which has had 15% revenue growth in recent years and net profit margins of about 36%. Even if the stock's PE declines and its profits growth rate slows, it may still be a great investment and continue to reach market cap milestones. The more important question, though, is where the money will come from. The fact that NVIDIA's clients include some of the top businesses in the world is arguably the most straightforward explanation for the company's sustained growth over time. NVIDIA usually includes a section titled Concentration of Revenue in its quarterly 10Q filings. Sales to one direct client, Client A, were for 16% of overall revenue for the quarter, according to NVIDIA's most recent 10Q dated May, the first quarter of its fiscal 2026. Sales to a fourth direct customer were 11%, sales to customer B were 14%, and sales to a third direct customer were 13%. NVIDIA's compute and networking segment, which mainly consists of high-performance graphics processing units, GPUs, for data centers and related hardware and software to manage AI workloads, such as devices that link GPUs together and facilitate system communication, was responsible for the revenue generated by all four customers. These clients collectively accounted for an astounding 54% of total quarterly revenue. Although NVIDIA does not specifically identify these clients, it is quite probable that they are Amazon, Microsoft, Alphabet, and Meta platforms, all of which rely on NVIDIA processors to run their AI infrastructure, services, and data centers. Aside from these big four, several other businesses like Oracle through Oracle Cloud Infrastructure are quickly pursuing cloud and AI goals. Tesla uses NVIDIA's CPUs in its autonomous driving models, making it a major customer. Through the Microsoft Azure OpenAI service, a platform for utilizing and creating OpenAI models, OpenAI is also a significant indirect customer of NVIDIA. Revenue concentration is typically a warning sign since it indicates that one or two clients could negatively impact outcomes if they reduce their expenditure. However, it may work to NVIDIA's advantage because its best clients have outstanding balance sheets, rising profits, and plenty of free cash flow. To put it another way, they have the means and avenues for innovation to gradually increase their expenditures over time, which will help NVIDIA's profits rise. Now that it is around the $4.5 trillion mark, NVIDIA's path to $5 trillion in market capitalization will be simpler on a percentage basis. NVIDIA's top clients must, however, receive a respectable return on their investments if the company is to remain a profitable stock. To put it another way, NVIDIA needs to be at the forefront of the AI market's growth from a computing and networking perspective. As a result, investors in NVIDIA might want to think about making the connections by listening to what its major clients have to say in their quarterly results and investor presentations. NVIDIA stands to gain if they maintain their enthusiasm for AI and keep increasing their funding for it. However, if the spending cycle shifts from expansion to downturn, NVIDIA's stock price and earnings could suffer significantly. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
I'm really interested as to how AllianceBernstein thinks about pricing this in, if at all. How are you looking at the opportunity to access the Chinese market going forward?
Well, I think China has always remained one of the most strategic markets and will remain so, and particularly in the AI world. If you think about AI, how we think about the scale benefit, right? The ecosystem. U.S. has always been, for a big part, the origination of innovations, particularly technology innovations. But China has done a phenomenal job in terms of using it and then using it at a very large scale. When you think about in the AI context, having an ecosystem globally is a very important strategic advantage long term. The more data you have, the better the model becomes. And that's not just for China alone, but think about globally. Who wants to be the dominant standard? Having the operating system, that layer, is very, very strategic for most companies longer term. So that's why we're thinking, that's what Jensen said, that's what Lisa Su at AMD said, and then I think that's how we're thinking about it, which is who will be the dominant AI standard? We want to have a one global ecosystem, or are we going to have different forks into the future?
But these so-called dumbed down, I mean, President Trump even called them obsolete chips being allowed into China. Does that ensure that they remain part of the tech stack?
Well, it's too early to tell for the most part. I think necessity usually drives innovation. So when we don't export anything, then it probably is a greater incentive for China to develop its own domestic ecosystem that's completely separate. So this is a bridge, I think, in my mind, that we can bridge that big, drastic action that we've seen early on this year. I think China does have advantages to some extent, and it has a more newly developed power infrastructure system. It has vast amount of data, and it's developed a lot of these open source, models that they are really rapidly pushing. So it remains to be seen, but I think it's quite important and quite strategic for the US companies to think about the global standard. Think about iPhone, for instance, right? Yes, the iPhone or Tesla, the data resides in China, we respect that. But that said, there's still lessons that we learn from adoption. At this point, if you think about a lot of AI models, we've trained a lot of data already. But going forward, the use of AI, the use of applications, and that's new sets of data that's constantly being generated, and we don't want to not have access to that.
Lei, the Treasury Secretary indicated to us that this pay-to-play or quid pro quo of a revenue share in exchange for access to the Chinese market could be expanded. What I want to know from you is if that were to be the case with high bandwidth memory or telematics or other parts of the server design, would you then upgrade your overall outlook for, in megawatt terms or gigawatt terms, the amount of installed capacity we could see around the world?
I think it's too early to tell. I think as you've seen from a policy standpoint, there has been quite a bit of fluidity in terms of the changes back and forth. But I think it's certainly promising that, some of the really drastic assumptions that we had in April, some of it's being discounted today. So it remains to be seen. And I would say it's very early, and I would refrain from making any assumptions whether too aggressive or I would say it is definitely an improvement from the worst case scenario.